Hello everybody. In this video, I will give an update on my portfolio and show you all of my positions. Let's get started. Right now, my portfolio is worth $184,639.68. And in the past year, I am up $10,867.14. However, things have gone pretty bad since my highs. My portfolio has gone down this year. So as you can see, year to date for the year 2026, I am down $59,384.39. So it was going well in the beginning in January, but now in the beginning of February, it is really, really bad. I'm down almost $60,000 year to date. So down quite a lot now. Today, I was down $6,432.54 during the day, and then after hours, it's pretty much even. So let's go over my positions. A bunch of my positions that I used to have are now expired. So I only have 3 covered call positions. I'm selling Robinhood $105 covered calls. These expire February 27th. My return, $1,500. I'm selling Kroger $63 covered calls. These expire February 27. My return, I am down $1,020. I'm selling SoFi $27 covered calls. These expire February 27. My total return, 0. For my stocks, a bunch of them disappeared from my portfolio because they got called away. So here are the stocks that I have now currently. I have 2,000 shares of Robinhood. Robinhood is at $86.98. My average cost, $116.75. My return, I am down $59,536.20. So just my Robinhood position alone, I'm down almost $60,000. Bought it at a bad time, and then afterwards it's been crashing recently. It's gone down a lot. I have 6,400 shares of SoFi. SoFi is at $21.79. My average cost, $5.70. My return, $102,986.05. I have 1,000 shares of Kroger. Kroger is at $64.17. My average cost, $67.69. My return, I am down $3,515. My buying power is $376,282.88. This is a margin account. I've gotten a lot of questions lately like, oh, if your portfolio value is only that much, how are you able to afford all these stocks? Well, it's because I'm using a margin account. I have made a previous video explaining what margin is and how it works, but basically when I buy stocks on margin, I'm only paying part of the cost with my own money. The rest of the cost is actually borrowed money. So that's why. My margin buffer is 52.41%. My margin buffer indicates how close I am to a margin call. The higher your buffer percentage, the lower your risk of getting a margin call. So because my margin buffer is 52.41%, I'm nowhere near getting close to a margin call. So I feel fine for now in terms of that. In terms of how much margin I'm using, my margin used is $187,186.84. My interest rate that I am paying, my annual interest rate is 4.50%. The daily interest that I am paying is $23.27. And I'm using $1,000 of margin interest free. Oh boy. So some things to talk about. Let's talk about Amazon. I don't think I talked about my shares getting called away just yet. So as you can see, I did sell the Amazon $220 calls, and as you can see, because Amazon was above $220 per share at expiration, these did get called away. So as you can see, Amazon $220 call assignment, the price at expiration was $239.30, which is above $220. So that's why. So that's completed. That's why I no longer have Amazon shares in my account. Another one is Google. I used to have these, but then same thing happened here. At expiration, Google, the share price was above the strike price. Yep, I was selling the Google $300 covered calls, and as you can see here, Google $300 call assignment. The price of Google at expiration was $338, which is above $300. So that's why my Google shares got called away. They're no longer in my portfolio. What else did I have? Oh, Verizon. Yes, I had some shares of Verizon. This one was interesting because it was close for a while, like it was hovering around $39, and then it shot up to like 46. So perhaps I was wrong to do covered calls on this, but it is what it is. They did well during earnings. Estimated was $1.06 per share. Actual was $1.09 per share. And I got a dividend from them, $69. All right, so I was selling the Verizon $39 calls, and as you can see here, Verizon $39 call assignment. The price of Verizon expiration was $44.52, which is above $39. That's why my shares of Verizon got called away. I no longer own those. I think that's it. I don't think I had anything else, did I? Robinhood, SoFi, Kroger, Verizon, Google, Amazon. I think that's pretty much it. Maybe I forgot something. I don't know. But that's what happened recently when my covered calls expired on the end of January. And then after that, as you can see here, I have new covered calls expiring at the end of February. So we'll see what happens from now until then. For Kroger, I chose a strike price, below the current price, which is at $64, because I kind of want these to get called away. So hopefully that's what happens. But if Kroger ends up being below $63 at expiration, then I'll just do the same thing again. I'll do more covered calls on Kroger. Robinhood, I chose a strike price of $105. It's kind of funny because Robinhood has crashed so much. My last position was $110 for the strike price. So I actually lowered my strike price, but this time $105 is actually above the current price. Right now, Robinhood is at $87. My goodness. So if it goes back up to $105, I will be happy with that. And if Robinhood stays below $105 at expiration, you know what? I don't mind owning shares of Robinhood. I think they're doing a lot of good things in terms of their offerings for the gold membership. If you pay for the gold membership, you get a lot of things like margin investing, and I think their gold credit card is pretty good. So what they offer is pretty good. So I believe in them long term. But, ooh, whoops. Looks like my camera shut off. It's okay, I'll just keep on talking. So Robinhood, as you can see, year to date, they've been down quite a bit. Robinhood is down close to 25% year to date. Not a good start. SoFi also went down a lot this year. Down 18.27%. So it was okay in January. It was good even in January, but now in February, oh boy, there's a lot of pain in February. So we'll see what happens the rest of the year, but for now, I'm just hanging on, doing what I can. yeah, we'll see how 2026 goes. But for now, it's pretty bad. Yeah, I've been losing a lot of money year to date. My portfolio is down 24.34% so far for 2026. That's not good. Hopefully things will turn around, but we'll see. All right, that's pretty much it for this update. If you guys like this type of content, please make sure to like and subscribe, and I'll keep on making more of these videos. And I'll keep on making them regardless if I make money, lose money, whatever the case may be. All right, thanks again for watching, and I'll see you guys next time. Bye.